Why do most strategies stop working in the real market? Because they ignore the main thing, how market makers move the price. Most people look for signals but don't understand the structure. And that's where the Venom model comes in, a new strategy from ICT, built on the logic of the big players. It allows you not to guess, but to determine the exact moment of entry when liquidity is grabbed, the structure has changed, and the market is ready to turn. And at the end of the video, we will analyze how this model gives a trade with a short stop and a potential of 1 to 5, or even higher. Only pure structure and work with the zone where the big money acts. Now, let's understand what this strategy is and why it is called a Venom model for the market. Venom model is a highly specialized strategy created within the ICT methodology. Its purpose is to allow a trader to work like a sniper, to enter the market only when all conditions are met, from liquidity grab to structure change and the formation of an imbalance zone. Why Venom? Because this model acts like a venom pointwise, sharply and only at the right moment. No noise, no unnecessary analysis, no fuss. The essence of the approach is one model, one direction, one solution. You don't switch between dozens of patterns. You wait for a specific scenario, and when it appears, you act clearly and according to the system. This strategy does not try to catch every impulse. It teaches you to wait, to recognize the intentions of the big players, and to enter at the moment when most of them are already trapped. To apply the Venom model correctly, you need to understand its basis. This strategy stands on 5 key elements, and each plays a different role in the entry point. It all starts with liquidity. The market always moves to where the stops are concentrated. Venom model teaches you to first find the zones where price is most likely to collect liquidity, previous highs, lows, and order clusters. This is where the first strike will be made. Next is the fair value gap, FVG. This is an area where the market moves so fast that it left no trace. It didn't fill the price gap. When an FVG occurs after a liquidity grab, it is a signal. A major player has intervened and the price can return to the zone to continue moving. Next, market structure shift. This is the moment when the market changes direction. The previous trend is broken, important levels are broken. This is the third confirmation, which makes it clear that the reversal is not accidental. Now the entry point. Venom uses the OT zone. It is a pullback in the range between 61.8% and 78.6% according to Fibonacci. This is not just a nice level. It is the zone where professionals most often get a position. It is from there that they enter the trade. And finally, time. Venom model is used not at any time of the day, but during the New York session when the market has maximum volumes and key movements occur. Usually this is the first 90 minutes after opening. Each element reinforces the previous one. And when all 5 coincide, you get not just an idea, but a full-fledged entry point with logic, confirmation, and calculation. When you see how all the elements of the Venom model add up to a single scenario, you may ask a logical question. Why does this strategy really work? The answer lies in the logic of the markets themselves. The Venom model is not based on indicators or templates. It is based on the behavior of large capital. It does not try to predict the market. It reacts to the actions of those who actually move the price. While most traders use random signals, Venom looks at where the market is gathering liquidity, where the momentum is headed, and whether there is an institutional footprint to that movement through FVG, structure, and session timing. The second reason is to avoid overcomplicated systems. Venom does not require a bunch of filters, levels, zones, and confirmations. It teaches you to look at the market simply, where they hit, where they left an imbalance, and how the market reacted to it. This increases not only accuracy, but also confidence in each entry. And finally, repeatability. This setup appears in the market over and over again. Yes, not every day, but when it does, it's recognizable. All you have to do is wait for the moment and follow the rules. And that's what makes Venom a strategy, not a chaotic set of signals. Now let's break down the Venom model in practice, step by step, so that you understand not just the theory, but know exactly at what to look on the chart and in what sequence. So, step 1 is to determine the liquidity formed before the start of the New York session. Usually, these are the levels that the market creates during the Asian or London session. Local maximums, minimums, consolidation zones. It is these levels that often become the targets to capture in the first 90 minutes of the New York session. You mark these zones in advance. They are not for entry, but for observation, because that is where the market will go first of all to withdraw stops and create conditions for a reversal. Step 2, Liquidity grab. The market goes beyond these levels by a sharp impulse. Most people think this is a breakout and enter the market, but Venom is just starting to watch at this point. It's important to us that the price goes behind the liquidity and comes back up. Step 3 is confirmation via FVG. Once liquidity is grabbed, there is the fair value gap zone. This is the trace of the institutional order. If the market respects this zone, it is a strong signal that the move was not random. Step 4, change of structure. The market forms a new high or low opposite to the previous trend. This market structure shift is a sign that the direction has indeed changed. And finally, step 5, enter the trade. You wait for a pullback to the OT zone, 61.878.6% Fibonacci, from the last impulse and enter. Stop loss for the extremum of manipulation. Take profit at the nearest imbalance, level or low, maximum of the day. This algorithm gives you not just an entry point, but a context, confirmation, and clear mechanics. Most importantly, it's repeatable. You don't guess. You wait. Venom Model requires clear discipline, strict adherence to all the rules, and patience. You cannot trade here on emotions. You need to wait, observe, filter, make decisions based on the structure and behavior of the price. And this is where most traders fail. If you realize that you are not ready to spend so much time on studying or just want trades to open without your participation, I have an alternative for you. This is MiloBot PRO, a trading robot that works according to the author's strategy. It doesn't use elements of ICT or Venom Model, but it's also built on a systematic approach, with clear logic, proven signals, and risk control. Over the last 4 years, MiloBot PRO has shown stable results. The account has grown from $34,000 to $272,000. And you can check it for yourself. The statistics are fully open on my FX book. If you want to test it risk-free, download the demo version and check how it behaves on history. All links are in the description below this video. The Venom model is not a magic indicator. It's a strategy. It's strict, structural, and precise. It's not suitable for those who are looking for quick signals. But if you are ready to wait, analyze, and act only on facts, it can become one of the most reliable models in your arsenal. Remember, one clear setup, worked out to the point of automatism, gives more stability than dozens of scattered signals. Do not try to trade using the Venom strategy on a live account right away. Start with observations. Note the liquidity. See how the market behaves in the first 90 minutes of New York. Analyze one setup in detail. That's the way to go. If the video was helpful, support it with a like, subscribe to the channel, and turn on notifications so you don't miss new releases. Learn to see the market like a market maker and trade like a professional.